Hi, I'm Michael Yardney, and as our property market shows signs of life again, many investors recognise that this cycle is going to be different to the last one of more subdued growth. So in order to outperform the markets, one of the common questions people ask me is, where's the next hotspot? People who ask for my opinion are usually disappointed that I don't know, and in fact that I don't really care. I tell them I'm not in the business of speculating. Instead, I make my investment decisions based on proven long-term performance rather than the shorter-term speculation. Fact is, hotspotting, seeking out the next big boom location, is speculation, and it's not really true property investing. If you're looking for the track record, if you look at the track record of people who've been chasing the next trend, it's pretty poor. On the other hand, to invest in property requires the intention of generating long-term capital growth that tracks above average long-term price growth of the area. Now here's what I find interesting. A lot of hotspots predicted by some of Australia's property analysts turned out to be correct. Some of the regional areas and mining towns boomed, at least for a while, as investors chased up prices. But unless they got their timing right, chasing the next hotspot turned out to be disastrous for many investors. Some are still left with properties worth considerably less than they paid, with rentals less than they used to get before, less than they expected, and they're unable to sell their properties today as buyers have now abandoned these markets. Because these markets have got very little depth from local demand. If you're into investing in short-term trends, being right isn't what's important, being right at the right time counts. And very few people can do that. So the history of investors trying to find the next boomtown is littered with people who got the story right and the outcome wrong. My system for building wealth is a bit different. Instead of buying in areas that have I sort of buy in areas that have got a proven track record, proven long-term history of outperforming the averages, and also in areas that are likely to continue to outperform because of the demographics of the people living there. Of course, I like buying properties at the right price, below intrinsic value. But I'm getting ahead of myself. I'll explain a little bit more about that in a moment. See, hotspotting is virtually the exact opposite of this sensible, not so sexy, tried and tested system for successfully building a property portfolio. So if we can, just for a moment, let's have a closer look at a few of the reasons why I steer clear of hotspots. First of all, hotspotting, in my opinion, is about short-term speculation, not long-term wealth creation. Most property investors are trying to build their asset base. They're wanting to grow their asset base so that one day it will replace their personal exertion income. The key to building a substantial property portfolio is to use your first property to leverage onto your next property, and then those two properties increase in value and you can buy more investments, and so on. You're only going to have the ability to do this if you invest in locations that consistently provide long-term capital growth. By definition, hotspots are not these type of areas, because just as quickly as they heat up, property values in these locations can come off the boil. Just look at what happened to some of the mining towns and sea change areas. Areas like Mandurah in Western Australia, for example. The other reason I'm not into hotspotting is hotspotting often means following the crowd, and more often than not, the crowd is wrong. Many try to buy in the next hotspot. They get their advice from some of those online reports or from get-rich-quick seminars. And in the short term, some of these predictions are self-fulfilling. If you suddenly get a diverse group of investors buying up in a small town, one that usually has a small market depth, this suddenly pushes up prices, doesn't it? And of course it proves that there is a hotspot. What's really happening though is you're seeing an overinflated market that more often than not is unsustainable in the long term. Some of our mining towns, the Gold Coast, the Sunshine Coast, are great examples of this phenomenon. On the other hand, strategic investors buy counter-cyclically, when others are a bit nervous, a bit afraid to get in the market. Another reason I'm not into hotspotting is it requires accurate timing, yet most investors don't have the necessary knowledge to know when it is the best time. Sure, some hotspots have excellent potential to generate long-term capital growth, but these are rare. Look, for example, some of the inner city suburbs that are yet to take off because they're still on the verge of gentrification and still have an air of industrialisation. They could be future hotspots. While some investors can pick these areas before the market takes off, timing of this is pretty difficult. The real problem is that by the time you find out about the next hotspot, sometimes a bit late, you've missed out on that early substantial capital growth. Or the opposite could be true. You might end up jumping in too early and not reaping any reward for years. In the meantime, your money has been tied up and you've missed out on real opportunities in proven areas. Now, a great example of that is in one of Melbourne's western suburbs, Footscray, which has been going to improve, I don't know, for at least the last 35 years, but it hasn't. Hotspotting is also based on opinions rather than facts. You read the articles in the media, you hear reports on TV suggesting these areas are about to take off, it's the next big thing. In reality, of course, it's just somebody's opinion. Be careful. Are these biased because they've got properties to sell in these areas and it suits them spruiking up certain areas? You're better off relying on your own research and your own due diligence rather than blindly accepting a so-called expert's potentially biased opinion. Another thought is really that hotspotting can generate short-term inflation in suburbs that just can't be sustained in the long term. Today's hotspot becomes tomorrow's overheated market. Look at what happened in the resources sector in Western Australia, in Queensland. Thousands of investors jumped on the bandwagon and bought into many mining towns that sprung up overnight and became a buzz of activity. But now that the resources sector has cooled off, many of these towns have gone from boom to bust as major industries supporting the local economy came crashing down. As I said, I know many investors who are still having trouble offloading their underperforming properties in areas that were hotspots. So my suggestion is to avoid the excitement of hotspots. It may make your investments boring, but it allows the rest of your life to be more exciting as you grow your wealth. So what's the alternative, you may ask? To ensure I buy a property that will outperform the averages, I use a four-stranded strategic approach. I buy properties below their intrinsic value in areas that have got a long history of capital growth and that are going to continue to outperform because of the demographics in the area. I look for affluent areas where people are prepared to and can afford to pay a premium to live there. Or areas that are gentrifying, areas that are becoming wealthier, where wealthier demographics are moving in, pushing up prices as they improve the area. The third strand to my four-stranded approach is I look for properties with a twist, something a bit unique, special, different, scarce about them. And the fourth strand is I like to find a property where I can manufacture capital growth through renovations or development. By following this approach, I minimise my risks and I maximise my upside. Each strand represents a way of making money from property. Combining all four is a powerful way of putting the odds in my favour. If one strand let me down, I've got two or three others supporting my property performance. So what are you going to do about this? Why not join me in a group of property and tax experts at my upcoming property market and economic updates that I'm going to be conducting in 4 states in Australia over the next month or so. I'm going to be presenting a heap of brand new content, things I haven't discussed in public before. I guarantee that there'll be several things I reveal that you're not doing and you should be. So why don't you click on the link below this and come along to the seminars, cut through all the media hype, all the contradictory predictions, and find out what a group of experts are doing and what's going to happen to our property markets. Look forward to catching up with you at my national property market and economic updates.